Hey traders, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and subscribe. And in this video, I'm going to go over trading divergence. I'm going to give you a couple of setups, what to look for, and some tips and tricks to hopefully make your trading a lot better. But before we do that, check this out real quick. Make sure you check out my website, daytradingfearless.com, to sign up for the $99 lifetime subscription special for the weekly S&P Emini trade zones. These are zones where I give you resistance, support, open gaps, and open VPOCs for the following week trading. You also, in the member section, will receive a 2-hour trade zone training video course where I teach you everything about the trade zones, how to draw them, so you could trade any stock, future, or cryptocurrency. And you also get the member section with all the resistance, support levels, and things like that to draw on any chart. So make sure you check it out. Links down below, but right back to the video. Okay. So let's get back to the video for trading divergence. The first thing, okay, is just so you guys kind of understand what divergence is where price makes a high and then the stochastics make a high too. Price pulls back, stochastics pull back, price makes a new high from its previous high, stochastics make a lower high, right? So here is what your divergence would look like. Okay, this is what your divergence would look like if I drew a trend line. We would have one line going from this high to this high, and then one line going from this high to this high, but you could see it looks kind of like a megaphone, right? While they should both be doing the same thing like that, okay, one is actually going down, the other is going higher. So here's a really good example. Price is falling, we make a low, okay? And when we make a low, look at what the stochastic does, right? We make a low, we then bounce, and then we make a new low below this prior low, but the stochastics are making a higher low. That is where our divergence would lie, right? So we would just draw something very similar to that, and this is where divergence looks like. Now, and look at what price does right afterwards. Now, the second part to understanding divergence is understanding the waterfall that I teach and all that. You could go look at my prior videos, just type in a waterfall Day Trading Fearless, you'll find them. But it's essentially price action. On the way down, you are making lower highs, right? Every high candle from the previous candle never breaks above the prior high. Think of that as you're going downstairs, right? No stairs higher than the previous high when you're going down, but then when you finally make one stair that goes higher, you've now reversed trend from going down to where you're now going up. And this is the very first candle, this green one is the very first candle that actually has reversed that trend from this entire pattern, right? And so what happens is while that happens, price on the stochastic kind of starts to go up, right? And then we have a failed waterfall because this candle breaks up below this candle. Now, a reverse waterfall is just flip everything over. Instead of the highs, all we care about are the lows like this right here, right? So every low is making a higher low. And then when you finally break below, you start in the downtrend. Just very simple price action going on there. So here we kind of break to the upside, and then two candles later, this red candle breaks below, okay, and we're back in the downtrend. And then look at this. We have a nice reversal, but we could see that the momentum is no longer the selling momentum isn't there. Even though price is going there, it doesn't mean that there's a lot of sellers down here like continuing to sell. And look at this, nice reversal to the upside. So what I look for is I like this pattern right here, right, with a lower highs, and then price reverses like this, and then once you see that and you see the RSI is way oversold, now this could last 3, 4, 5 candles, or it can last 1 or 2 candles like it does here. But if we break below this low right here, okay, then my eyes are going to be drawn to what's going on with the stochastic, right? Well, the confirmation of this low would be when we break above this prior highs candle, right? Because once we break below, we're back in a downtrend. So we're going to go 1, 2, 3, 4, 5. And then this green candle breaks to the upside. Okay. And then that kind of changes the entire course. And with the divergence, we could see how it changed the entire course too. Now, a couple tricks, okay, is when you see this, what you want to look for, okay, one of the things you want to look for are reversal candles, right? This is a nice wick, kind of a doji hammer, we'll call it, where we opened here, went all the way down here, and then we came all the way back and closed. And when you're looking at that, you should be like, hey, this candle is about to close. If we break above, let me try and get long. And my stop would go 1 tick below this low. Okay, that would be our stop. And so you could kind of figure out through Fibonacci's or whatever, maybe you go, hey, let me look for a 1-to-1 risk reward. So if you enter at 65, your exit's at 61, we'll say, right? That's a 4-point range. Okay, just look for 4 points to the upside, and that would be your ultimate target. Now, what I personally like to do is I like to look for wicks, right? Kind of levels I can lean on, maybe somewhere like this low right here, this wick low, for price to reverse, break above right here, okay, break above, and then maybe pull back, retest this level. And a lot of times I'll lean against a wick because now I only have maybe 3 or 4 ticks of risk. Okay. I see the divergence. I'm just saying, hey, let me buy on that pullback, and then let me try and risk like a point, and then look for 2 or 3, 4 points to the upside, right? Because if I could wait for that pullback, I get filled down here. My 4 points would be right here, we'll say, while if I enter here, it's way up here, right? So it's kind of like if you're patient, you could get a better fill with a lot less risk. But the downside to that is exactly what just happened, is price never pulled back, right? So without price pulling back, we never got filled and we missed the trade, right? So another way is you could say, hey, let me enter 1 here, because maybe you could trade the micro ES futures and buy 1 here. If it pulls back, buy another, right? And just say, hey, I'm all out back here. And if it does go, at least you're long 1. So hopefully that helps. So to sum it up, you want to see the waterfall, a bounce, and then make a new low with another waterfall. Look for a reversal candle, look for the divergence, and then maybe look for the kickback to get long, or you could just get long on the break and then kind of take care of your targets in that way. So I hope this video was helpful. Just try and give you guys some really good information to help you guys with your trading. Remember, you could trade using this with any stock, future, or cryptocurrency. It all depends what you you trade. But for me, my main product is the S&P E-mini futures. For day trading, it trades very clean. But again, thank you very much. And until next time, we'll talk to you soon.